Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth right here in Singapore. The investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for number of reads and 58,000 likes. I've produced over 900 videos with more than 500,000 watch hours as of June 2025. I also focus on regional and global economic trends. If you're serious about taking your Singaporean investment journey to the next level, you'll want to hear this and consider how our daily premium insights can give you a real edge. Here's something that might surprise you. While most investors chase growth stocks, July 2025 presents 6 SGX dividend opportunities that could significantly outperform Singapore's government bonds. That's right, we're talking about companies paying dividends next month that offer yields ranging from 1.7% to 4.17%, while our 10-year government bond yield sits at just 2.23% as of June 24th, 2025. Think about it this way. Your CPF ordinary account gives you 2.5%. Some of these dividend stocks could potentially give you more. But here's the catch. Not all dividend stocks are created equal. Some are hidden gems. Others are value traps waiting to hurt your portfolio. Today, I'll break down the complete ranking of all 6 SGX stocks paying dividends in July and August 2025. We'll discover which one scored an incredible 87 out of 100 on our attractiveness scale. We'll also explore why the biggest name on this list might not be your best choice. And I'll share my personal take on which stocks deserve your hard-earned Singapore dollars. Let's start with our top performer. Interra Resources limited trades under SGX ticker 5GI. This energy company scored 87 points out of 100. Why such a high score? The numbers tell an amazing story. Interra offers a 4.17% dividend yield. That's higher than most REITs and way above government bonds. But here's where it gets interesting. The company trades at a PE ratio of just 4.10. Compare that to Singapore's market average of 13.91. It's like buying a dollar for 30 cents. The PB ratio sits at 0.35. This means you're paying 35 cents for every dollar of book value. The PS ratio is 0.98. These are deep value territory numbers. But there's a catch. Interra has a market cap of only SGD 23 million. That makes it a microcap stock. The dividend payment is scheduled for August 1st, 2025, with an ex-dividend date of July 17th. Think of microcaps like small boats in rough seas. They can move fast when winds are favorable, but they also rock more when storms hit. Our premium members get detailed risk assessments for stocks like these every single day. Coming in second place is SIA Engineering Company. Ticker S59 scored 85 points. This aerospace company offers a different value proposition. SIA Engineering provides a 2.90% dividend yield. Not as high as Interra, but still solid. The company has a market cap of SGD 3.476 billion. That's much larger and more stable than our top pick. The PE ratio is 25.08, which is higher, but still reasonable for a quality company. The dividend payment is set for August 12, 2025, with an ex-dividend date of July 28th, paying SGD 0.07 per share. Here's what I like about SIA Engineering. It has a PEG ratio of 0.90. This means you're getting growth at a reasonable price. The company benefits from Singapore's position as an aviation hub. Think of it as riding the wave of our Changi Airport success. Now let's talk about the elephant in the room. Singapore Telecommunications, or Singtel, ticker Z74. This blue chip giant scored only 60 points despite being the largest company on our list. Singtel has a massive market cap of SGD 56.269 billion. It offers a 3.10% forward dividend yield, though historical data shows yields as high as 6%. The PE ratio is extremely high at 64.1. That's more than 4 times the market average. The dividend payment is scheduled for August 19th, 2025, with an ex-dividend date of July 31st, paying SGD 0.10 per share. It's like buying a luxury car when a reliable sedan would do the job. Yes, Singtel is stable. Yes, it's liquid. But you're paying a premium price for that stability. Sometimes premium prices don't lead to premium returns. The remaining 3 stocks scored lower for different reasons. UMS Holdings, ticker 558, offers a 4.10% dividend yield, but trades at a PE ratio of 43.21. The next dividend payment is July 24th, 2025, with an ex-dividend date of July 9th, paying SGD 0.01 per share. SATS Limited, ticker S58, provides stability, but only a 1.70% dividend yield. Their next payment details weren't specified in the current data. Far East Holdings, ticker 5TJ, scored just 27 points and offers limited appeal. Here's something interesting about timing. These dividends spread across July and August 2025. This creates a steady income stream rather than a lump sum. Think of it like getting your salary in weekly installments instead of monthly. It helps with cash flow management. Our premium members get exact payment dates and amounts for all upcoming dividends across SGX. The combined market capitalization of all 6 companies reaches SGD 66.98 billion. The average dividend yield across these stocks stands at 3.02%, representing a significant premium over Singapore's government bond yield. This context proves crucial for evaluating the relative attractiveness of these dividend opportunities. What makes this analysis particularly valuable is our comprehensive scoring methodology. We evaluate 5 key dimensions weighted by importance for dividend investors. Dividend yield receives 25 points for sustainable yields between 2% to 6%. PE ratio scoring favors companies trading below market averages. PB and PS ratios contribute 20 and 15 points respectively, emphasizing value characteristics. Market capitalization scoring provides up to 15 points, recognizing that larger companies typically offer more dividend stability. Now let me share my personal take on these opportunities. After analyzing all the data, I'm most excited about SIA Engineering Company. Here's why. Interra Resources offers amazing value metrics, but the microcap nature makes it too risky for most Singaporean investors. Remember, we're building wealth for the long term. We can't afford to lose sleep over volatile positions. SIA Engineering hits the sweet spot. It's large enough to be stable. The valuation is reasonable. The dividend yield beats government bonds. Plus, it benefits from Singapore's aviation growth story. I'd rate this a buy for dividend-focused portfolios. Singtel is a hold at best. The dividend appears safe, but the valuation is too rich. If you already own it, keep collecting dividends. But I wouldn't add more at current prices. For the others, I'd pass. UMS Holdings is too expensive despite the attractive yield. SATS yields too little for the risk. Far East Holdings lacks the quality we want in our portfolios. My advice? Start with SIA Engineering if you want steady dividend income. Add Interra Resources only if you can handle the volatility and have done your homework on energy sector risks. Remember, dividend investing isn't just about yield. It's about sustainable income that grows over time. These companies need strong fundamentals to keep paying dividends during tough times. The key takeaway? July and August 2025 offer some interesting dividend opportunities on SGX. But like any investment, you need to match the risk with your personal situation. A retiree might prefer Singtel's stability. A younger investor might take a chance on Interra's value. Singapore's market context is important here. With REITs averaging 6.9% dividend yields and the market trading at a PE ratio of 13.91, these dividend stocks offer varying degrees of attractiveness. The fact that our average yield of 3.02% beats government bonds by a significant margin makes these opportunities worth considering. Before you go, if you found this video helpful and want to seriously level up your investing game right here in Singapore, imagine getting daily premium insights delivered to you up to a week before anyone else sees them. That's what our members get for just $1 a month, less than a cup of coffee. Think about it. Consistent, early access to valuable information that can truly accelerate your financial journey in the unique Singaporean context. Ready to join the inner circle? Just click the link in the description below to become a member. If you enjoyed this dividend analysis, check out our recent video on Top 5 Singapore REITs for 2025, where we dive deep into real estate investment trusts that could complement these dividend stocks perfectly.